push and pull factors driving migration in the 2020s are not unlike those experienced throughout history, including pandemics, wars, socioeconomic factors, and immigration policies. Current migration patterns around the world vary by region and by country. Our key findings are as follows. First, the movement out of cities during the pandemic is likely overstated. In Asia Pacific and in Europe, there was much less movement out of urban areas compared to North America. Second, in North America, migration to cities is rebounding after a brief outflow during the pandemic and will continue to rebound as pandemic restrictions are gradually lifted. Third, in parts of Europe and North America, suburban migration did accelerate, and in all regions, migration tended to occur within and between metro areas. We did not find there to be mass permanent deurbanization as widely reported in the media. Fourth, migration patterns we have identified will benefit apartment demand, but also alternative property types, office occupancy, and retail demand. And finally, we did observe that movement to cities with lower housing costs, warmer weather, and attractive lifestyles has been especially strong in several countries, particularly in the US. According to the United Nations World Migration Report 2022, almost 281 million people, or 3.6% of the world's population, live in a country other than the country of their birth. This represents a significant increase of 107 million more people compared to the year 2000, when 2.8% of the world's population were classed as international migrants. But there is a wide variation by country. While only 0.1% of the population in mainland China is comprised of international migrants, that proportion rises to 13% in France, 14% in the UK, 15% in the US, and 30% in Australia. At the higher end of the range, 43% of Singapore's population is international migrants and over 88% in the United Arab Emirates. When we looked at net migration compared to natural increase, or births minus deaths, within countries, we found advanced nations such as Japan, Italy, and Germany had modestly positive net migration over the last 5 years, but negative natural increase, such that their overall population growth is flat to declining. Countries with modestly positive natural increase, but also positive net migration include France, the UK, the US, and Sweden, while Singapore, Australia, and Canada have among the highest rates of net inbound migration, driving their continued population growth. China has virtually no net migration, but a positive rate of natural increase, such that its population continues to grow. Canada is a model for international immigration, with one of the highest immigration rates per capita in the developed world. Canada's immigration system targets what are called economic category immigrants, people who are skilled or educated and often able to work upon arrival to the country, which boosts economic growth. Economic category immigration accounts for about 60% of Canada's total annual immigration, with the remainder made up of family reunification, refugee, and humanitarian category migrants.
Due to Europe's aging population and unfavorable demographics, inbound migration will be needed to ensure population growth and therefore robust demand for real estate in the coming decades. Several major European economies, including France, Italy, and Germany, are forecast to see negative natural growth, with migration needed to make up the shortfall. Migration into Europe in recent years has been uneven, with Germany seeing by far the largest increase in foreign-born residents over the decade of 2010 to 2020, at around 6 million. This was driven in part by Angela Merkel's policy of welcoming refugees escaping the Syrian civil war in 2015. The influx of 1.6 million migrants was a boost to the country's demographics, resulting in a period of the strongest population growth post-unification. These immigration patterns can support demand for real estate, particularly residential. Supply of new housing is inelastic, with construction unable to meet large spikes in demand. Residential rents in German cities rose during this period, despite weak natural population growth. The recent invasion of Ukraine is a similar but even larger external event. Latest estimates suggest over 4.6 million people have escaped the country as of mid-April, with close to 90% seeking asylum in European Union countries. This is more than triple the typical annual external migration number into the EU. To date, neighbouring countries countries, most notably Poland, have welcomed the majority, although settlement programs will mean countries around Europe will take in greater numbers moving forward. Depending on the outcome of the war, this may only be temporary, but such a large influx of people would represent a major boost to Europe's demographics. The impact of the pandemic on urban migration in Europe has differed by city. Berlin saw accelerating volumes of residents moving out of the city for elsewhere in Germany, likely for more affordable housing, whereas in Madrid, international arrivals dropped dramatically in net terms as students and economic migrants stayed put during strict regional lockdowns in the Spanish capital. Granular internal migration data in the UK allows for deeper analysis of migration patterns, allowing us to understand who is moving and where within the country they are going. The analysis shows that people in their 30s are moving out of London in increased numbers year on year, generally remaining within commuting distance of central London, but in moving to cheaper housing markets throughout the southeast of England. This suggests that commuter towns with strong public transport links into London could form the basis of suburban residential investment strategies. Prior to 2016, the outward movement of people from London to the rest of the UK was offset by international arrivals. The Brexit vote in 2016, however, meant that arrivals from the EU slowed significantly. Whilst the exodus of EU workers post-Brexit did not materialise immediately, the twin impacts of low arrivals from the EU and more people moving to elsewhere in the UK are a risk to the demand prospects of London moving forward. The lack of affordable housing in London is a key driver of out-migration. Increasing the housing supply, particularly by providing affordable housing solutions, represents a significant investment opportunity for real estate investors.
Within the United States, movement to places with lower housing costs, warmer weather, and attractive lifestyles has been strong during the COVID-19 pandemic. This trend prompted out-migration from the most expensive states like New York and California to states like Florida and Texas. Within states, suburban migration has also accelerated. As international migration and natural population growth slowed from 2020 to 2021, domestic migration has become a primary determinant of regional development, fueling apartment demand in the South, East, and Mountain states. Yet currently, gateway cities have recently started to rebound. Outflows have started to decline in urban residents, yet they are still considerably above pre-pandemic levels. However, the high cost of housing in these cities may slow their recovery rate. Data from United Van Lines also shows the movement to lower dense and Sunbelt states in 2021. The baseline moving data shows a net outflow before the pandemic from 2010 to 2019, yet U.S. Census data shows this is not the case. Instead, it may result from the Equifax data underrepresenting younger, lower income, and international immigrants households more likely to move to these urban neighborhoods. This group tends to fall below the radar of United Van Lines data sources.
Internal and domestic migration is a mainstream in Asia-Pacific's two largest economies, China and Japan. This is primarily supported by the large domestic population base in these two countries, and to a lesser extent, culture and language barriers also discourage international immigrants. In Japan, more than half of the domestic migrants live and work in the three largest metropolitans, Greater Tokyo, Greater Osaka, and Greater Nagoya. Domestic migrants concentrated in big cities continue to boost up Japan's urbanization rate. We expect the trends of domestic migration to highly urbanized Japanese cities will continue post-pandemic to drive demographic change and real estate market fundamentals for multifamily, offices, and logistics, which is in line with LaSalle's investment thesis and strategy in Japan. In China, domestic migration and continuous urbanization fueled much of the country's GDP growth since 1990. Both the urbanization rate and the share of temporary population increased around 20% over the past 2 decades. China's domestic migration trend has been from the central and west China to the east or coastal side. This is primarily driven by economic development, employment opportunities, environment, medical, and education resources. As of 2020, residents in China's east coast account for around 40% of the population. We expect these domestic migration trends to continue to support the development of logistics and multifamily sectors in key gateway cities in East Coast China, especially the Greater Beijing, Greater Shanghai, and the Greater Bay areas.
There are more reasons to focus on demographics in the 2020s than ever before. Real estate investors like LaSalle are increasing their exposure to the residential and the healthcare sectors. Property types as diverse as apartment buildings or single-family rental properties, senior living, student housing, medical offices, and life sciences. These are all closely linked to demographic drivers. Properties that are well positioned to take advantage of the demographic linked trends like migration, changes in household composition, or age structure, these all have a much higher likelihood of success. Demographers divide migration into two types. First is cross-border migration from one country to another, and the second is domestic migration within a given country, both between metro areas and within metro areas. The degree of international migration on its own is not really an indicator of the strength of a country's major real estate market. However, it does provide clues as to where demand is coming from, really for all the property types. And of course, domestic migration is especially influential for the health of most local real estate markets. Taken together, international and domestic migration provides a more complete picture of what's going on. For example, Tokyo, Munich, London, Miami, Toronto, Singapore, and Sydney, Vancouver also, these all benefit from high levels of domestic and international migration. In the decades to come, migration is likely to become more closely linked to climate change and to the loss of sustainable habitats. While developing countries will be most affected by this trend, developed countries also need to anticipate spending on infrastructure that can provide protection from rising sea levels or chronic heat stress and volatile weather. Real estate investors will need to evaluate infrastructure resiliency as part of their market selection process in the future.